Hello everyone, welcome back to Stock Spy. If you have been following me for a while, you know I've been a long time bull on TradeDesk. I posted multiple videos on why I think the company is one of the best plays in ad tech space. But the stock just got crushed. And we are talking about 35 to almost 40% drop right after the earnings. So in today's video, we are going to break down exactly what happened in Q2 2025 report, why the market reacted the way it did, and whether my bullish stance still stands, or if it's time to rethink the forecast. Let's start directly with the numbers. Q2 revenue came in at $694 million, which is a 19% year-over-year increase. That's solid growth, faster than the overall digital ad market. The adjusted EBITDA was $271 million, giving them a healthy 39% margin. And that was actually a touch above what Wall Street was expecting. GAAP net income hit $90 million or $0.81 per share on a non-GAAP basis. EPS came in at $0.41. So it's a revenue beat, earnings beat, profitability intact, which looks great on paper. Then what happened? The real trouble started with the guidance. For Q3, the management projected at least $717 million in revenue. That sounds fine until you realize it's about 14% year-over-year growth, which is noticeably slower than the 19% we just saw. And that slowdown spooked investors. Add to that a headline change in the leadership. CFO change. CFO is stepping down and Alex Kyle, a board member and a former Salesforce executive, is taking over. While I think that's not necessarily a bad thing, Wall Street hates uncertainties, and a CFO transition in the middle of a growth slowdown just amplified the jitters. Another factor is the competition is heating up, especially from Amazon's DSPs. Amazon is leveraging its retail and Prime Video data to draw advertisers onto its own walled garden. That's making investors question how much share the traders can keep capturing in connected TV and retail media. The irony is, TTD is actually still doing well in those areas. The company's Kokai platform is now powering 70% of ad spend on their system, improving performance and transparency. Their CTV and retail media channels continue to grow, and their Open Path initiative is streaming how publishers connect with advertisers. But in the current market, even good executions can get overshadowed by slower growth trends. But still, why a 40% drop? Part of it is valuation. Going into the earnings, TTD was trading at rich multiples, over 50x forward earnings in some estimates. When growth slows, even slightly, high multiple stocks get punished hard. On top of that, Bank of America downgraded the stock and cut its price target to around $55. That's a downgrade. This, combined with the growth concerns, leadership change, and competitive pressures, created the perfect storm for a panic sell-off. Now, here is why I'm not throwing in the towel yet. The trader still has over 95% client retention, quarter after quarter, and for years. They are the largest independent demand-side platform, meaning they are not tied to a walled garden like Google or Meta. That independence matters to advertisers who want transparency and control of their campaigns. The Kokai AI upgrades and their investments in identity solutions like UID2 are long-term plays that keep them ahead in the privacy-first advertising world. And let's not forget, Wall Street's median price target is still around $80, which is from today's $54, almost a 48% upside. So here's where I stand. The drop is truly painful, but it's not the end of the story. It's definitely not the end of the story. Yes, growth is slowing, competition is real, but their business model and technology stack remain strong. In my view, this is a perfect buying opportunity for a long-term investor. Again, not a financial advice. Of course, just my perspective. I update my forecast to a 6 to 12 month range of it getting back to $80. I don't expect a quick rebound to an all-time highs, but if macro ad spend improves and TTD executes its strategies, recovery could well be meaningful. So to wrap it up, earnings were good, guidance was cautious. Wall Street just freaked out and the stock got hammered. But as a TTD bull, I'm still staying the course. The fundamentals are intact, the moat is still there, and long term, ad tech shift towards independent, transparent platform isn't going anywhere. If you own TTD, let me know in comments how you handle this drop. And if you're new here, hit that subscribe button for more deep dives into growth stock like this one. Thanks a lot for watching.